This is admission of a partner which will be asked for 12 marks. Okay, there are few cases in admission. The first case is the new partner brings goodwill in form of cash. Okay, it is up to the old partners. If they want, they can withdraw that money, or they can keep it in the business. That means it can be retained in the business. So only from these two cases a question will be asked, okay, for the coming exam. That is, when the new partner brings goodwill in form of cash, when it is withdrawn, what you do, and when it is not withdrawn, what you do. I'm trying to cover both in the same sum. Okay, so Raja Rani are partners in a firm sharing profit and losses in the ratio 3:2. Their balance sheet as on 31/3/2020 was as follows. So they'll give you the balance sheet as usual: liabilities amount, asset amount, and then the adjustments are this way. On 1/4/2020, they admitted Mantri as a partner. So the word admitted, okay, clearly shows that this is an admission sum. See, if you know admission properly, retirement becomes very easy. Only the treatment of goodwill will vary in retirement. Apart from that, all the other steps, like you will prepare the same accounts even in retirement. Okay, so the question also will look same. Here it will be given they admitted Mantri. So this is the admission sum. They admitted Mantri as a partner and offer him 1/5 share in the future profits on the following terms. Mantri has to bring in rupees 30,000 as his capital and 10,000 towards goodwill. So it clearly says that he is bringing cash for capital and goodwill. Okay, as per AS 26. So whatever we are doing is according to accounting standards 26 only. Goodwill is to be withdrawn by the old partners. Okay, depreciate machinery by 5%, appreciate building by 10%, PDT is reduced to 2,000 and investments is revalued at 25,000. Okay, now it clearly they've mentioned that goodwill is withdrawn by the old partners. Okay, if this was not mentioned, I assume that it is not withdrawn, it is retained in the business. They'll clearly mention when it is withdrawn. Okay, so the first account, it is in admission and retirement, we prepare three accounts: revaluation account, partners capital account, and the new balance sheet. So the first one is revaluation. Again, I'm not going to explain in depth the concepts, and the logic and all is clearly explained during class hours, so I will do it brief. So revaluation account, so you have debit side, credit side, particulars, amount, particulars, amount. Okay, as I said, you please follow revaluation account. You're revaluing the assets and liabilities. Why? Because before the new partner enters, we try to find out the changes in the assets and liabilities, and that profit or loss because of revaluation has to be shared among the old partners before the new partner enters. So here we take decrease in asset, increase in liability. Just the opposite this side. That is, any increase in asset, decrease in liability will come on the credit side. So this is a hint for you. Okay, so using this I can start solving. Now how do I find whether the assets are increased or decreased will be given in the sum. Okay, Mantri has to bring 30,000, so this is related to capital account, so this will go in capital account. Goodwill treatment will be done in capital account. Next, depreciate machinery by 5%. Now machinery is an asset for me. When they say depreciate machinery, that means the value of the asset is reduced. So when there is decrease in asset, I take it on the debit side. So you will write to machinery. Okay, now how much is the depreciation? The depreciation is given as 5%. 5 by 100 on machinery. The machinery value is 60,000. So on 60,000, 5% will give me 3,000. Okay, so remember here we will take only the increase or decrease. So this key, this trick will help you. Just take only the increase or decrease. Okay, in dissolution we take the realized value. Here we take only the jump, that is the increase or decrease, the difference, that amount only we take. Yeah, so to machinery. Next, appreciate building by 10%. Now building is an asset Appreciate building means the value of the asset increases. So increase in asset will come on the credit side. I've clearly mentioned here increase in asset, the symbol. Okay, so I take it here. So I will write by building. Now how much is the increase? They've mentioned 10%. So 10% on your building. The building value is 50,000. So 10% on 50,000 will give me 5,000. Done. Next. PDD is reduced to rupees 2000 and investments is to be revalued at 25. So let's do PDD. Now I'll make a separate video on PDD, that is all the possible cases related to PDD. Anyways, I've done this many times in detail. So PDD is reduced to 2,000. Now you have to check what is a PDD, the old PDD. So the PDD is 3,000. That means in the piggy box you already have 3,000. How much they're asking you to maintain? It has to be reduced to 2,000. I've told you for PDD you will follow the rule of liability. Okay, so when you're creating a new PDD or increasing your PBD, you will take it this side, debit side. When PBD has to be reduced, you will take it this side. Okay, now PBD is reduced. So PBD reduced, so blindly I can take it this side. So the word reduced itself tells you it has to be taken this side. So by PDD. Now how much is it reduced? You have to be careful. They're saying it is reduced to 2,000. That means the final amount in that piggy box should be 2,000 only. But how much is there? 3,000. So it has to be reduced by 1,000. So 3,000 minus 2,000. If at all, if it was said PDD is reduced by 2,000, that means from the piggy box, they are asking you to remove 2,000. So reduced by means that's the final amount. How much you have to deduct. Reduced to 2,000 means in the piggy box there has to be only 2,000, but there's 3,000. So you have to reduce 1,000. So please be careful with by and to. Okay, by PDD 1,000. Next, investments are to be revalued at 25. How much was investment value earlier? 20,000. Now it is revalued at 25. So investment is an asset and the value of the asset is increased by how much? 5,000. From 20 it is jumped to 25. So increase in asset again will come on the credit side. So I take here by investments. Now how much is the increase? From 20 it is increased to 25. That means there's a jump of 5,000. Done. Okay, there are no more adjustments, so I can close this account. How do I close it? Total both the sides. Okay, so when I total this side, I get on the credit side I get 11,000, here 3,000. Now which is more? 11,000 is more, so I write 11,000 in the total column. Now which side was less? Debit side. By how much was it less? 8,000. That is from 11,000 deduct 3,000, 8,000 is the difference. Now this 8,000 is called to profit transferred to partners capital account. Who are the partners? Raja and Rani. I told you to whom you have to divide depends on the first line. So Raja and Rani in the ratio 3:2. So Raja, Rani. Now how much will Raja get? In 8,000 he will get, his share is 3 by the total. So 3 by 5. How much will Rani get? 8,000 into 2 by 5. It is her share is 2. So 2 by the total 5. So that will give you 4,800, 3,200. So this is the amount. Okay, this is nothing but your 8,000. How that has been divided? Okay, you can arrange it in the way I've told you. It should come exactly in the, write it in a proper way. Okay, now this is your revaluation account. After revaluation account, you will do partners capital account. Okay, so I will write capital account. Now who are the partners? There are 3 partners. Okay, there are 3 partners. Okay, there are 3 partners. Now you will write debit side, credit side. This is your capital account. Okay, now who are the particulars? The partners are Raja, Rani, and also the new partner who's Mantri. So you will do all the three partners account together. Mantri. Particulars, Raja, Rani, Mantri. Okay, yeah. Now I will start doing the sum. As I said, your capital account is the same, for admission, retirement, death, dissolution. For all your partnership accounts, your capital account will be the same. You will always begin with your capital balance. Capital being a liability, you will take it on the credit side. So the opening balance will always begin on credit side. So I will write by balance brought forward. Now how much is your capital? Raja 60,000, Rani 40,000. Done. Then I told you, always see the same side you will find reserve. So reserve also belongs to partners, so distribute it. So the same side you will write by general reserve. Now how much is the reserve? 25,000. So 25,000 should be distributed to Raja and Rani 3:2 ratio. So that will give me 15,000, 10,000. Done. After general reserve, I said check if you have profit and loss. If you have profit and loss, it will be distributed the same way in the profit sharing ratio to the partners. If it is not this side, always check on the other side, that is asset side, if you have profit and loss. So how much is the loss? 5,000. That has to be distributed on the opposite side to the partners. So you will write to profit and loss account. How much is the loss? 5,000. Should be distributed in 3:2 ratio. So Raja will get 3,000, Rani will get 2,000. So I repeat, you will begin with by balance brought forward, the capital balance, by general reserve. If you have P&L profit and loss, distributed on the same side. If you have P&L on the other side, opposite side you take it. Yeah, done. Next I will go to the revaluation account. Check where partner's name comes. It is here, to Raja, to Rani. So how will I read the heading? If this is to Raja Rani, heading will be by revaluation. Now which side is by? This side. So you will write by revaluation account. So this is your revaluation profit. How much is it? 4,800, 3,200. Done. After you finish this, you will go to the new partner. Now the new partner, they say Mantri has to bring a 30,000 as capital and a 10,000 as goodwill. So you will focus on the new partner now. The new partner brings cash. So when cash comes in, the journal entry is by cash. Okay, another point, check in the balance sheet. If you have only cash, everywhere you can use by cash to cash. If it is cash at bank, then I will use bank account. Because it's only cash, so I can use cash. So by cash account. Now how much is the cash coming in? 30,000 for capital and 10,000 towards goodwill. So this is capital plus goodwill. Okay, so that amounts to 40,000. Who is bringing it? Mantri. So in Mantri's column, I will write 40,000. Okay, so I repeat, by cash account, capital plus goodwill. Take the total and show it in Mantri's account. The next step, you will distribute the goodwill which the new partner brings. So I told you on the credit side, remember, you will show who's giving goodwill to whom. In admission, the new partner has to bring goodwill and distribute it to the old partners. Okay, because the old partners have worked hard for all these days and they've gained a goodwill, they've got a good reputation and goodwill, for which the new partner will have to contribute something, because he will start sharing that goodwill and also the profits of the firm. So you will write, remember, you will show who's giving goodwill to whom on the credit side. Now who's giving the goodwill here? Mantri is giving it to Raja and Rani. So you will write Mantri's capital account. Now how much monthly is we giving the goodwill is 10,000. Now this 10,000 should be distributed in the sacrifice ratio to the to Raja and Rani. Now how much is the sacrifice ratio? Sacrifice ratio will be same as the old ratio because they've given only the old ratio and the new partner share. Only when these two items are given, generally for 12 marks, the sacrifice ratio will be same as the old ratio. So it is 3:2. So when I distribute, I get 6,000 and 4,000. 6,000 and 4,000. Now this is by monthly's account to Raja to Rani. I've told you to read it anti-clockwise. So it is by monthly. Heading is to capital. Whose capital? Raja account and Rani account. Only for goodwill, you will copy the same entry on the other side. Because as I said, if one person is receiving, the other person is paying. So when you're doing both accounts together, you will show, when I'm paying someone in my book, I will show it as if I'm paying. When the other person is receiving. So in his book, you will show as if he's receiving. When we are doing both, we have to show it on both the sides. Now, by monthly account to Raja to Rani. The same entry you will show the other side. So it will be to Raja, Raja's capital account, to Rani's capital account. I'm doing the same entry by monthly to Raja Rani this side. How much Raja? 6,000 and Rani 4,000. In which column will I write? Monthly's column. Okay. Yeah, I would have stopped here if the question was silent. In the sense, if they had not given the statement, goodwill is to be withdrawn by the old partners. If this statement was not given, I would have stopped here. Okay, but here they're saying goodwill is withdrawn by the old partners. So when goodwill is withdrawn, cash is going out. So partners are taking away that money from the business. So cash is going out of the business. So you will write to cash. So 2 is this side. So you write to cash. That is goodwill withdrawn. Okay, again, the variations or the changes that can be given in the question is, they will say goodwill withdrawn. Now, how much Rani can withdraw? 6,000. Her share is 6,000. Raja can withdraw 6,000. Rani 4,000. Suppose if in the question they mention half of the goodwill withdrawn, then Raja can withdraw 3,000. Rani can withdraw 2,000. Then I would have written 2,000 and 3,000 and 2,000 here if half is given. Okay, when that half nothing is mentioned, it means the entire goodwill is withdrawn. So Raja can withdraw 6,000, Rani can withdraw 4,000. Done. That's all. Now I close the account. Now how do I close the account? Total both the sides. Whichever is more, you write it in the total column. Now when I total, credit side is more, so you get 85,800. This side it is 9,000. So 85,800 is more, so I write it here. Now this side is less. By how much is it less? 85,800 minus 9,000 gives me 76,800. So 76,800. Okay, now what will I call this as? To balance carried down. Do the same thing for Rani. So when I total this side, I get 57,200. This side 6,000. So 57,200 is more. So I write 57,200, 57,200. Now this side is less. By how much is it less? 51,200. The same thing for monthly. When I total here 40,000, this side 10,000. 40,000 is more. So I write 40,000, 40,000. Now this side is less. By how much is it less? 30,000. This is your capital balance done. Now I have to do balance sheet. Okay, balance sheet. Okay. So you will write the heading. This is what? This is balance sheet of the new, this is the new balance sheet. So you will write balance sheet of Raja, Rani and month 3. Okay, as on 1/4/2020. It is like the new balance sheet. Okay, so 31/3/2020. So the next year will begin 1/4/2020. So you will write that as your opening date. Yeah, now the format is the same. So you will have liabilities, amount, assets, amount. Okay, this balance sheet also I've taught you the trick. It is very easy. You'll refer your old balance sheet and your adjustments, that is your revaluation account. It is simple. So as I said, you refer your old balance sheet. Okay, just see if any changes have taken place. If you've made changes, do it. If not, you copy the same. Now creditors. Did I touch creditors anywhere in the revaluation account? Okay, this is your revaluation account. Did I do anywhere creditors here? Nothing. So I can copy the creditors as it is. Okay, so your creditors was 40,000. Okay, 1 minute. Okay, so this is your revaluation which I did. Okay, just for your easy reference I am doing it this way. Okay, now your balance sheet, as I said, you will refer your old balance sheet and the revaluation account. Now creditors, did I touch creditors anywhere? No. So I write creditors as it is. Bills payable, did I take bills payable anywhere? No. So I will write bills payable as it is. Now how much is the bills payable value? 20,000. So copy 20,000. Next, general reserve, I've already distributed to partner, so it will not come. Next, capital, yes, there is a change in capital. Now you will write capital. Now how much is your new capital? Capital balances I've changed. Now how much is your capital? You've taken here, in the capital, the balancing figure. So Raja's capital would be 76,800. Rani 51,200. Monthly 30,000. So just copy the capital balance. Yeah, done. Now next, after that I'm done on the liability side. Go to your asset. Now asset, this side is what? Cash. Did I touch cash? Yes, there are few changes because the new partner is bringing goodwill and capital. So your cash balance will increase. So how much was your cash? 5,000. Okay, now 5,000 was your cash balance. What is happening? The goodwill and capital is coming in. That means the new partner is bringing capital and goodwill, 30 plus 10. So I will write 30,000 is for capital, 10,000 he is bringing cash for goodwill. Okay, plus if there is any more inflow of cash, you would have added. Okay, if there's any outflow of cash, you minus. Now cash is going out because goodwill is withdrawn. So you will minus 6,000 and minus 4,000. Okay, this is the cash withdrawn. Okay, so the net amount would be 35,000. I repeat, your old cash balance from your balance sheet. Okay, add the capital and goodwill that the new partner brings in. Okay, if the goodwill is not withdrawn, I would totally hear this and write. But here the old partners are withdrawing the goodwill. How much has been withdrawn? 10,000. So you minus that 10,000 and show it outside. Yeah. After cash, I have missionary. So write missionary. How much is missionary? 60,000. Check in your revaluation account if you've made any adjustment. Yes, missionary. Now you're dealing with your asset. So whenever you're doing something on the asset side, if you have adjustment this side, what does this arrow show? Downward. That means there's a decrease in asset. So minus it. If you have adjustments on this side, you will increase it. That means you will add it. The same thing for liability. If it comes this side, you add it to your liabilities. If it decreases, if the item comes on this side, if any adjustment related to liability comes on this side, minus it. Now missionary is an asset, it is on the debit side. So what will I do? Minus how much? 3,000. So your missionary was 60,000. minus 3000, which will give me 57,000. Next, stock. Did I touch stock? Did I do anything in the revaluation account? No. So I can copy stock as it is. Now how much is stock? 25. So copy 25,000. Next comes your debtors. Okay, debtors, bad debts and PDD is related to debtors only. Okay, so as I said, you can take the amount which is outside 20,000. Okay, 20,000 minus, now what did I say? If it is, you're doing asset side, if PDD is this side, what will I do? Minus. Okay, asset. If it is this side, you will add. Now PDD is which side? This side. How much? 1,000. So you will minus 1,000. Sorry, it is this side. So what will I do? I have to add it. I repeat, PDD is related to assets. It's related to debtors, which is on asset side. So if you have adjustment related to debtors, that is PDD comes on this side, I will minus. If it comes this side, add. So I add 1,000, that gives me 21,000. Done. Next, buildings. Did I touch building? Yes. Okay, how much is building? 50,000. Now which side is the adjustment? On the credit side. So what will I do? Upward arrow of assets, so add. Add how much? 5,000. So 55,000. And done. Next, investments. Did I touch investments? Yes. So investments was how much? 20,000. The adjustment is on this side. So what will I do? Add. Add how much? 5,000. So 25,000. Okay, done. Now there appear profit and loss. This loss is already distributed to partners, so it will not come. Okay, yeah. Now after this, check your revaluation account if you've taken all the adjustments. Missionary, yes, I've taken 3,000. Buildings I've done. PDD is taken. Investments is done. Okay, so I finished all this. Okay, so I can close this account. Okay, if you have outstanding salary given in the question, outstanding salary is nothing but it's an increase in liability. So when I do revaluation account, I would have taken it on this side, increase in liability. And in the balance sheet, while doing balance sheet, I would have taken it on the liability side. That's why I said check your revaluation account if you've taken all the items. So now after doing this, I can total both the sides. So when I total, my balance sheet will tally. That is, your total assets will be equal to your total liabilities. Okay, so please remember 2 points. When you have cash, when the goodwill is withdrawn, okay, when the goodwill is withdrawn, in the capital account, you will show 2 cash. Okay, and in your cash balance sheet, you will minus it. If they don't mention goodwill is withdrawn, then I don't do this step. Okay, I will not write 2 cash, and here I will not minus cash. That's the only difference. If half is withdrawn, then half of the goodwill I would have written 3,000, 2,000. So here also I would have minus, my cash balance will reduce by minus 3,000 and 2,000. Okay.